Tyler, you and I have talked a lot about Plug Power. We've made several videos taking a look at the company and kind of tried to warn people away because of some concerns that we've had with it. And sadly, a lot of the things that we called out as concerns have started to materialize. Stock has been absolutely crushed. They issued a going concern notice basically saying that expected cash flows and working capital is not sufficient for the next 12 months. There's a lot of real reasons for concern. Tyler, as always happens with these stories, a lot of investors looking at a company like this and thinking this is maybe an opportunity to buy. You and I want to talk about some alternatives.
I wouldn't call these the to the moon stocks that most people might expect from the hydrogen economy.
I will challenge you and say maybe they're not to the moon stocks, but they've certainly put a lot of investors' wealth in orbit over the past 10 plus, 20 plus years. These are wonderful businesses. I'm Jason Hall. This is The Smattering. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. You'll definitely want to check that out after this video. Okay, Tyler. So first we'll unpack the concerns. I want to recommend people to go back into our channel and watch our other videos that we've done about Plug Power. If you're looking at it, if you're really thinking about maybe buying shares right now, the concerns. To summarize the challenges, this isn't a new business. A lot of people think maybe it's a new upstart business in hydrogen. The things that they're trying to do with green hydrogen are appealing and attractive. You and I both, to some degree, more or less degree, do see a future for energy where hydrogen is going to be a bigger part of it. That seems relatively undeniable. And the cost of renewables are coming down so much to make green hydrogen a bigger and bigger portion of that as well. The problem with Plug Power is that this is, again, it's not an upstart. This is a company that's been around for more than 2 decades and has never generated positive cash flow in a single year of its existence in more than 20 years. And now it looks like, because of a number of issues, including lack of profitability, probably not the best capital allocation strategy, they're in some serious financial trouble. Let's move beyond that and talk about, for investors that are looking to make money, where we think they should look.
So let's step back and what is hydrogen really? Hydrogen's an industrial gas. It's not something that we as a society have not been using for a really long time. Hydrogen gas has been an essential industrial component for a very long time. It just happens to be that we haven't been using it for energy storage for a myriad of reasons, because whether it's the way they make fuel cells or the availability of hydrogen or just the physical limitations of we hadn't quite figured out how to use hydrogen in a fuel tank for a car. It's things like that, or at least mass produce one. Infrastructure, there's a whole bunch of other reasons, but that doesn't mean that it isn't a key component. If you look at petrochemical manufacturing, you look at a heavy industry, hydrogen's been a big thing. And there are companies that have been profitably manufacturing and selling industrial gases for a long time. And the two that you mention a lot, and ones that I'm not as intimately familiar with as Jason is, but Lind or Lindy, depends on how you pronounce it, and Air Products and Chemicals.
Depends on the country you're in. It is really what it boils down to there. Yeah.
So you have two companies that look, if you are an investor, I can understand if you look at 1 year of financials for this company, it's underwhelming, right? You look at it, it's like a slow revenue grower. Maybe margins are okay. Its return on capital is high single digits, which is nice, but it doesn't have that spice, right? It doesn't have that excite you to your core sort of feeling that you get when you're investing in the future of energy or in the hydrogen economy or anything like that, because you're also producing industrial oxygen, you're producing industrial CO2, ethylene. There's just a lot of other components that go into these businesses. But that's the key point, is like these are businesses, this is exactly what they do. They've been doing it for years. And yes, they're specifically, the way they've been making hydrogen is not related to green hydrogen. It's called gray hydrogen. It's made from a process called steam reformation of natural gas.
This is from Lindy's most recent presentation that talks about the different kinds of hydrogen. So again, gray hydrogen, 80% from steam reformation from natural gas, and then as a byproduct of refining as well. And then blue hydrogen, this is the idea is that it's basically gray hydrogen that they're capturing the CO2. It's to make it a little bit cleaner.
Yep.
And then this, again, this is the alley, this is the lane that Plug Power plays in, Bloom Energy and other hydrogen companies trying to play in. And Lindy is beginning to participate more and more.
Yeah, and that's the idea, is that these are established businesses that they're not wholly unaware of the transition towards renewables, right? It's or a more carbon neutral method in way of doing this. It's just that they've been doing it for a really long time and they've been a little bit more methodical in trying to figure out exactly how to do this and do it in a way that's profitable and beneficial and generates the sufficient returns on capital that justify why you would do this. You can only plow tons and tons of money into something so long for so long that it doesn't have a proven track record of capital returns and hope that it works out. Eventually, most of the time, that stuff blows up. With that in mind, again, these are not companies that you're going to be like, wow, how this is incredible. I just want to give an example. I was looking at Air Products and Chemicals. Over the past 10 years, Air Products and Chemicals revenue has gone from about $10 billion to $12 billion. That's what? Barely 15, 20% over 10 years. So that's a very small growth. But with a little bit of components of operating leverage and ways of wringing out costs in the business, they've gone from 15, 20% revenue growth to having earnings per share double. And that's the power of these kind of businesses, is that, again, you're not going to see the hyper growth component, but they are so good at what they do and the way that they can efficiently manufacture returns for investors. And that's where it matters. It's consistency. They can do it year in, year out. Yes, they can be a little sensitive to economic conditions, and we've had a nice 10-year run. But overall, like if you can pretty much set your clock to 7% returns on capital over the very, very long haul, that is a winning formula.
Here's what it looks like going back to the beginning of 2013. So it's a good run for the S&P 500 over that period too. Tyler said the economic environment's been pretty good. S&P's done quite well, but both Linde and Air Products have generated better than 15% compounded annual returns. And you're talking about more than 4xing your capital, nearly 5x total returns over that period. That's incredible returns. And for a lot of investors who have gone the other way, trying to find these hyper growth, next big thing companies that are burning through money are missing perfectly good opportunities to profit from companies like Linde and Air Products. Between the two, as we wrap up the video here, these are the kind of companies where valuation matters a ton, because you talk about those very low revenue growth rates that are basically what GDP growth is, right? These are so large, they're so enmeshed in global economies, and they sell mainly to industrial users. What they do, they put a plant in place where they have pipelines literally going from their plant to that customer's plant, supplying those industrial gases. And then they supply in like a 200-mile radius around it to everybody else that needs it at really good margins. And that's where they get very profitable revenue. So they get really good operating leverage on their assets. And that's why these stocks have gone up so much, because as Tyler said, even with the small revenue growth, their earnings per share has grown much, much better, right? So you have an opportunity to buy these companies. And between the two, like I said, right now, the better value is certainly Air Products, trades for less than 18 times operating cash flow, and you're looking at paying more than 20 times operating cash flow for Linde. Neither one is cheap. Neither one of these is cheap, but I think in terms of, they generally never are unless we're in the throes of a recession.
Yeah, these are the kind of companies for me that are the, in case of recession, break glass stocks, where it's
right.
I don't touch them for, could be years and years, but all of a sudden when we're in a recession and everyone has soured on stocks, that's when these things all of a sudden become attractive.